Hello traders, and welcome to my video on the average true range percent strategy. In this video I'm going to teach you how you can use the average true range indicator to help you capture moves such as this one for over 300 pips. Okay, this is a relatively easy trading strategy that can be used on Forex, stocks, cryptos, commodities, indices, bonds, any trading instrument, and you can also use it on any trading time frame. I'm using a 1 hour chart here. This is a dollar Swiss franc chart. Okay, I like to trade the 1 hour, 4 hour, daily, weekly, monthly chart simply because they contain more price data and therefore I find the signals tend to be more reliable. Okay, and that applies to the ATR indicator along with other technical indicators, price action analysis, support resistance, trend lines, candlestick patterns, so on and so forth. Okay, so basically the average true range indicator will just measure the range over the defined periods that you set. Okay, so we're just going to use the default range of 14, so the last 14 bars, okay? As I said, it's a 1 hour chart, so for me that gives enough data for the indicator to be reliable. I've also added levels, okay? These levels that you see here, you see these lines here on the ATR indicator, this blue indicator here. These levels are not included by default. I am using the MT4 trading platform. They probably won't be included with your average true range indicator, so you just have to add them, okay? The levels I've added here, I've gone from 1, 1.5, 2, 2.5, and 3. Okay, it will vary. Your decimals will vary depending on the chart time frame that you are using. But this is just basically so that we can get a visual gauge of when there is a high range or when there is a low range. Okay, so basically the higher the ATR, this indicator here, the higher the ATR, the more volatility or movement there has been in the market. You can see, for example, here with this big bullish candle in upwards direction, the ATR also shot upwards because that's because we were seeing an increase in the trading range from the past 14 bars. Okay, so therefore we knew that there was a big move happening. If you look at your chart, you can see that there was there. Okay, and just as in this downtrend, if I zoom in, you can see a big candle here, okay, big bearish candle, and the ATR indicator also increases. Okay, so that's just the basics of the indicator. It's just measuring the trading range, and okay, we're going to basically interpretate this for deciding when we will take a trade, when we will avoid trading, or perhaps it may be different for you. For example, if you are a range trader and you want to trade in a narrow range, perhaps you're looking to pick reversals off, you might actually look for the ATR indicator to be a low value, such as here when you see it's below the 0.001 line. You might, just look for that to happen and then mark the highs and lows and try to trade within that range, okay? If you are range trading, okay? Flat market consolidation, you might look to buy around the low or sell around the high, okay? You can see if you did that, there are a few opportunities to pick off some reversal trades there. Okay, another thing is you might, if you're using a scalping strategy, for instance, you might just look for a low ATR range around the, say you're trading a dollar currency pair, let's just say euro dollar or even this dollar franc, okay, dollar, US dollar, Canadian dollar, basically non pairs that do not have the Japanese yen or the Australian dollar. Around the Asian trading session, okay, a pair without any of the currency pairs that are predominantly involved in the Asian session and a low ATR value, so a low range, might be a good time if you're trading a strategy that relies on low volatility, okay? Because that way you're not going to get, well, depending on if there's any major news release, you're less likely to get unexpected movements and price can just sort of bounce around during these times of low volatility. And the ATR indicator is great for helping pinpoint such times, especially on the lower term time frames. You might want to go down to the 5 minute, 50 minute charts if you're looking to trade reversals in a range. The ATR, just basically when it's at a low value, the market is quieter, to keep it as simple as possible. As you can see here, when the ATR is below this level and below this level here, you sort of have this range. And if you, again, as I said, you're looking to take reversal trades, you could be considering to trade within these ranges. And then when the ATR just has a breakout to the upside, you might want to avoid trading in the range. Okay, but that's not the strategy I'm using, and that's not how I like to trade. I like to trend trade. Basically, I don't see why we try and scalp the 5 minute, even 1 minute or 50-minute charts for a few pips when we can capture big moves like this on long-term chart frames for, hundreds of pips. We don't need to chart watch all day. We don't need to stress ourselves out, trying to pick the perfect trade on lower term chart time frames. With good money management, we can capture moves like this and ride them as much as possible. Okay, so how does the ATR come into play? Well, the first thing I'll do is we can see there's been an uptrend. We'll look at this one in a minute, but we can see there's been a nice uptrend here. Okay. Prices then form this resistance point. Okay, we've got a wedge pattern. Wedge pattern form. This trend line is held up well as a line of support, but then we can see a breakout to the downside here, and then this support becomes resistance. Okay, so we have a nice level of resistance. We also have the market making these lower highs, so we're expecting a downtrend. Okay, personally, I would have looked to have entered on this breakout here. Okay, so we had the initial downtrend, we had the pullback, this level of support, and then we could have entered on the breakout. As you can see there, big breakout bar. Traders were watching this level. That's for those who didn't get in even earlier up here. This line of support, nice wedge pattern again. Market making lower highs, lots of bearish price action. Okay, so some more aggressive traders could have got in here. Otherwise, we could have waited for the trend to form more, have this pullback. You've got, again, more bearish candlestick patterns. Okay, inverted hammer, inside bars, lots of indications through black crows as well. I've got videos on the various candlestick patterns it's worth being aware of, but we could have taken this breakout here. Okay, and how would the ATR have helped in this instance? Well, you can see the ATR increased, okay? It increased in value, which told us that there was a big move, or the market was moving more than before, okay? So we have this drop here when there's, not much action, not much movement. You can see here this consolidation, and then as it breaks out to the upside, it coincides nicely with this sharp downwards momentum. Then it decreases in value again, which is a sign things are slowing down, which gives us a perfect opportunity to start looking to time our entry, okay? Because then that can signal a pullback, okay? Before a nice breakout. Again, the range increases, as does the move downwards here. Okay, so we could have used that as confirmation. Personally, I wouldn't have needed or wouldn't have just relied on the ATR to take this particular trade. Okay. Had we have taken it though, could have put the stop loss above this high here. So you're looking around 15 to 20 pips, which is relatively tight for the 1 hour chart time frame. And then as price fell, we could have used a trailing stop. So we could have just moved the stop loss. First, when price fell around here, I'd move the stop loss to break even. And then just as the price keeps dropping, just move the stop loss above the highs, above the highs, above the highs. Try to maximize the move as much as possible. Okay, basically when I get into a good trend like this, I'm going to look to gather as much pips as possible. I'm not going to have a 20 pip stop loss up here and just, after this drop down here, see 40 pips and get excited and close my trade. And, I think I don't like to use a fixed take profit. I just want to take what the market will give me. Okay, because that way, if we have say we have an average 20 pip stop loss, even if we take 3 or 4 losses, we know that eventually when we catch a big trend like this one, we're going to make back those losses and then some more on top. You can of course close part of the position on the way down as well. Okay, if you missed this entry or you're late to the party, you can just do the same thing. So if I just mark a line here so you can see the ATR, you just wait for something similar, so a big move. Okay, and after a big move, we can just wait for it to lower, which means the market's quieter. As you can see around here, this consolidation, then we can just mark our support line. This is an even stronger level of support. It's going back to here. Okay, so we can expect, lots of traders are watching this level, and as you can see, have a nice breakout. This support then becomes resistance and price continues down. Market's making lower highs. Okay, so this was a good entry. Still plenty of pips left in this move. Could have had a tight stop loss, just 10 pips above this high really, and over 200 pips profit potential. Again, using a trailing stop to maximize the move as much as possible. Don't exit too early. Then when you see the market start to make higher lows, if the trailing stop doesn't get taken out, you can of course exit manually. Okay, so if we go further on, just follow this line for the ATR. Okay, so what do? We wait for the ATR to move up. It shows an increase in volume. Okay, and then as it drops, you can use the levels as a gauge if you want. Let's just say when it drops below this level here that we've added, then we know that there's likely to be a pullback. We know we're trading in the direction of the trend, so we could just draw our support level, draw in the pullback, break out there, support becomes resistance. Not a bad entry in towards this trend. Still, you don't want to end up selling too low. Okay, you want to try and get in the trend as early as possible. Okay, so same principle again over here. So we have the big, we have the ATR range shoots up. So we know there's been a big move. We wait for it to fall back down again. So that signals our pullback. And then we just draw our support line. And we can enter on the breakout of the support in the direction of the trend. Okay, that's key thing is we're trading short or selling only because we know we're in a downtrend. I'm not going to trade against the trend. You can do what you like, but as the saying goes, the trend is your friend. Until here, we come into a bit of a bear trap. Basically, what happens in a bear trap, as you can see here, is sellers or potential sellers see this move downwards and they want to enter it, but they're entering here at the low. They're selling low. Okay, so they're getting in at the wrong time. And what happens is as price moves up, their stop losses are taken out, and traders who were in earlier on up here are taking their profits, and it just causes this shift of momentum to the upside, as you can see from these big bullish bars here. Okay, so basically what we were doing is we were first establishing support and resistance, then we're establishing the direction of the trend, and then we're going to use the ATR to see when there's a big move in the trend and then wait for it to lower down, which shows us the range is decreasing, which might mean a quiet period, which we can use to draw support or resistance levels to catch a breakout entry into the trend. Okay, if we just look at this move here. Okay, obviously the market here is making these lower highs. Got our resistance up here. So resistance, lower highs. In fact, there was a nice move upwards here. Then this support level breakout, support becomes resistance. We're going to look to short in here somewhere. Okay, so we could have done the same thing. Okay, well, this move was starting actually even further back. We could have shorted any time from back here, if not before, when we see this resistance level. Market's making these lower highs. Okay, so we can wait for an initial move up here. Okay, so you see where the ATR increased in value here. Okay, and then as it pulled back below the low, you know what we do. We wait for the price consolidation, then we can always draw our support. Okay, and look for a breakout to the downside. This level of support, if I just remove that one, this level of support then becomes resistance. Almost resistance later on, so we know that's a strong level. You could have entered on this breakout here. Okay, then we get another level of support forming here. Breakout to the downside. Again, ATR shot up. What does that mean? That means a big move. So we had our big move there. Then as it goes low, okay, we wait for the pullback. So that's the pullback there. You could have traded long perhaps if you wanted into that, but the ATR is quite at a low range. So we just draw our level of support to enter a sell trade into the trend. Market's making lower highs. Okay, same thing happens again. You see this big move down here? Okay, what happens? The ATR goes up. Then as the ATR lowers, we draw a level of support, and you could have entered a breakout trade there. Okay. Same again, big move up, ATR lowers, draw support level, enter there. Okay. Here as well, you can see the ATR making higher lows, so the range is increasing. And then what we do is we wait for the ATR to drop back down. Okay. And as it does, we know we can start looking then for our breakout trade in the direction of the trend. Okay, so the market starts ranging. However, we know that it's making these lower highs, so we're looking to sell. We're in, if we just zoom out, we can see the bigger picture, clear downtrend. Okay, so we're going to look to time our entry on the breakout there when the market's quieter, and we can jump in at a favorable price point. Okay, moving on, if you missed that entry there, there's another opportunity. We have the move there, ATR goes up, then as the ATR, average true range, decreases again, still had an opportunity, but you just want to be careful you don't end up selling at the low, especially after we've already had this move from all the way up here. And in fact, there probably would have been opportunities to get in even earlier up here somewhere. Okay, although the ATR was slightly low, perhaps waiting for a bigger move down just to sort of establish that downwards trend, or whatever the trend direction may be. Okay. Here's an example of a long trade using this strategy. Okay, so massive move upwards on the average true range there. So breakout to the upside. As it drops, okay, you can draw your resistance and then trade a breakout. That resistance becomes support, and you could have entered in on this uptrend. Okay, just using the ATR, and then wait for the peaks and the trials to buy into the trend. Okay, I think it's worth mentioning I wouldn't necessarily use this indicator after all of that, to be honest. I think it's more useful if you're range trading. Okay, just simply looking for lower ranges to pick off the market for a few pips here and there. And the reason I say that, if we just delete the indicator, okay, you can trade these trends and these breakouts of support or resistance in an uptrend without needing any indicators. You just need good price action analysis and sensible money management. Okay, if you take this breakout trade, okay, and you capture that move, there's over 500 pips profit potential. Okay, you can close part of the position on the way down if you like, bank some pips. If you use the trailing stop and you got taken out up here, if your trailing stop was here and you got taken out here, could have entered again on this breakout. Okay, same up here. Ample opportunities to capture hundreds of pips on this downtrend. Again, we don't want to have like a 20 pip stop loss and 20 pip take profit. Just make life harder for ourselves. There's plenty of trading instruments we can watch to capture moves. So no need to force trades that aren't there. We don't want a FOMO, okay, fear of missing out. Don't want a revenge trade. We don't want to have negative emotions, fear, anger, greed, take trades that aren't there. Okay. Yeah, well, hopefully that's been a good giving you an idea of how you can use the average true range indicator in your trading strategy. Okay, there it is, back on the chart. Just wanted to show the range traders out there. If this is an uptrend, really see these higher lows, uptrend. Again, you can do the same strategy that we looked at earlier here, but I was just wanted to point out when it's low like this, you see this here, okay? It's below that level for a sustained period of time. The market is in a range, okay? So if we just zoom in there, okay, this is a range in market, right? That's what the average true range indicator is telling us, if your eyes couldn't tell you. Anyway, and so below here, there are traders who may use like a stochastic oscillator crossover. Just pop that on the chart. just might use indicators to try and pick off tops and bottoms in a range. Okay, so for example, here the stochastic crossover below the oversold area, it could be a buy trade. When it crosses in the overbought area, sell trade. Okay, buy trade, so on and so forth. Selling here in the extremely overbought area. I don't like to trend trade personally. I'm not going to try and capture a few pips. Range trading. I don't like to range trade because I would rather capture big moves, big trends, and try and bank hundreds of pips that way rather than just pay more brokers, fees, spreads, commissions, etc. Another example here, you can see ATR shot upwards. Okay, market reached this support level, higher lows. We're in an uptrend. So what do? We wait for the pullback. ATR drops. That's when we can hone in on our resistance level. You can see there it's tested 3 times. We know this is strong resistance, and see that breakout. Resistance becomes support. This would have been a good entry into this trend. Okay. There you go. Hopefully that's given you an idea of how to use the ATR indicator. As I said, it's not the be all and end all in my humble opinion. You can of course trade as you wish, but hopefully I've given you a couple of ideas in this video that you can implement within your trading strategy. As always, make sure you practice on demo to begin with. Do appreciate you watching. If you can like and subscribe, that'd be great, and I hope to catch you on the next one. Take care.